The biggest myth in property is that you need money to invest in property. And in this video, I'm going to break down to you guys exactly why that is a myth. So stay tuned. What's up everyone, my name is Ntombela and welcome to my financial education channel. So in this video, I'm going to be discussing with you guys how you can invest in property without having any money. Now please guys, just as a disclaimer, this is not financial advice. I'm not a financial advisor. I'm just a random guy on YouTube giving their opinion, right? So please keep that in mind. So we all know property to be this really difficult investment to get into, that you need a lot of money, you need a steady stream of income, you need a good credit score, you need 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, countless number of requirements, and then eventually we end up not buying a property, we end up not getting into property investing, all because we think that there are so many rigorous requirements needed for us to get into the industry. And that is a myth, guys. I can guarantee you it is a myth. There's only one thing you need. Well, I guess two things you need if you want to invest in property. It's either you need money, which is what everybody thinks, or you need to be creative. There are many creative strategies that you can implement if you want to get involved into property investing. And in this video, I'm going to be explaining one of those strategies, which is lease option agreements. So don't get me wrong, if you are going to the bank to get a bank loan, they are going to need a steady stream of income and a good credit and all of that. All those lovely things, they are going to need them, but that's not what I'm talking about in this video. I'm going to be discussing how to get into lease option agreements specifically. It's an investing strategy that you can get into with little to no money at all. So you might ask yourself, what is a lease option agreement? So a lease option agreement is basically when you buy a property today, however you agree to pay for it in 5 years time, in 7 years time, in 10 years time, whatever you agree with the seller. And how do you benefit from this is that you get to choose the price today. Let's say 500,000 rands is the price of it today, and you agree on that price today, and you actually get to pay for it in 7 years time. So you will benefit from any capital appreciation on the house, that in 7 years time that you'll be actually buying a property below market value at that time, right? And what's nice about it also is that you have the option to purchase it. You actually have the option to purchase it. So if in 5, 7, 10 years time comes and you don't have the money, you don't actually have to purchase the house. You can just choose to opt out of it, right? So I think it's best if I show you guys this in an example. So let's do that right now. So I'm going to illustrate this in a quick example. So pay attention, right? Let's say there's a house that's for sale and it's listed at 500,000. So this is the asking price of the property, right? So it's likely to be higher than what market value is, and normally you'd negotiate this price. However, you're gonna come and say you want to purchase the house, and you'll say, can I please purchase your house for 550,000 rands, right? So you're offering 550,000 rands, and you're offering it to pay for it in 7 years time, let's say. So you're not gonna pay now for this because you don't have money. You're going to pay for it in 7 years time. So you'll speak to the owner and say, hey, listen, I want to purchase your house. However, I want to purchase it for 550,000 rands in 7 years time. How does this help you? It helps you because you don't have this amount of money. And what you can do in the meantime, when you own this house and the owner agrees, you can rent out the property. So, you'll rent out the property for, let's say, 7,000 rands. And then you'll have to pay the owner of that property a rental as well. And you'll be paying them a rental, let's say, of 6,000 rands. And you're going to make a profit on a monthly basis of 1,000 rands. So the seller of the property is in essence becoming your bank in this scenario, because you didn't actually have to qualify in any way for you to get this property. So you'll be making 1,000 rands profits per month. Plus, you're also benefiting from any capital appreciation of this property in the next 7 years, right? So if there's any capital appreciation on the property in 7 years, you'll also benefit from that because you're not going to purchase it for whatever its market value is in 7 years' time. You'll be purchasing it for 550,000 rands. So that's what's really great about this. And if in 7 years' time, the property has not appreciated or you feel like it's not worth purchasing, you still don't have to buy it. It is an option, which is why it's called a lease option agreement. So you have the option to purchase it. However, the seller will have the obligation to sell it to you. So one thing you might ask yourself is why? Why would you want to do this, right? So you definitely would benefit from the cash flow on a monthly basis on a property you actually don't even own yet. And in the event you choose to purchase it in a few years' time, you now can purchase a property below market value. And it would have been negotiated years ago, so there's actually no getting out of it. So that's definitely what's in it for you. Then what is in it for the seller? Like, why would an owner do this? Why would a homeowner willingly do this with you? And the truth is, not every single homeowner would be willing to do this transaction with you. You just need to find the right owner who would be willing. If you ask enough and you look around enough, you will find a homeowner who's willing to do this to you. The type of homeowners that would be willing is someone who's a tired landlord. Someone who's sick and tired of tenants and having tenants, and they actually on the verge of wanting to sell their property, might want to enter into this type of transaction because now they know surely for sure that they have a tenant for the next 7 years. No matter what happens, they have a tenant that is going to take care of the property, not going to give them any headaches for the next 7 years, and they're going to receive the rental income that makes them happy for the next 7 years. And then at the end of 7 years, they'll sell the property and finally be rid of their headache. So that's the example of a type of homeowner, a type of landlord that would be willing to do that type of transaction with you. We all know of rent to own. We all see signs of it, or at least have heard of it. So why don't you use this type of investing strategy, in type of purchasing strategy of a home as an investing strategy? Use it to actually benefit and make money out of it. Let's not sit at home and complain that we can't buy houses. Meanwhile, we actually haven't even tried the strategy out. You could do this on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 different homes. You could do it on as many homes as you want to do it on. Obviously, you need to do your proper due diligence on the area and all your risk associated with this type of transaction, because there are risks associated with it. So you need to do your proper due diligence. But this is a strategy that you can enter into that does not require a lot of money from you, but it does need a lot of effort in terms of investigating the area, investigating the rentals in that area, the type of tenants, and how long the tenants usually rent for, and what is the default rates in that area. Those are all the type of things that you need to look into, which is basically all the type of things that you need to look into if you were purchasing an investment property anyway. So that question of, but what happens if my tenants don't pay rent? What happens if I don't get a tenant? Like, it's the exact same thing of, what if you buy a house and your tenants don't pay rent? What if you buy a house and your tenants decide to up and leave, or they trash the property? These are all the risks that you are taking on as a homeowner because you want to invest in property. So this is just a strategy. Take it, leave it, it's up to you. But this is definitely a very useful strategy that you can use if you want to grow your property portfolio and delay the payments. So when you're entering into this transaction, I would definitely recommend that you use a lawyer, because you don't want problems 7 years down the line. You really don't want any issues 7 years down the line, because anything can happen if you decided to download some agreement on the internet and now maybe the homeowner doesn't want to sell to you, or you like anything can happen, you know. So rather prevent all of those issues and use a qualified lawyer to draft the agreement so that you are protected in this case. So yeah, that's just lease option agreements in a bundle. So like and subscribe to the video. Hit me in the comments below actually if you guys have any opinions on the subject matter. If you have any questions on lease option agreements, hit me up in the comments. Even if you have any other video topics that you want me to address, maybe I'm not actually addressing the topics you guys want me to do, so hit me up in the comments below and like the video, share the video with someone you think might benefit from this video. So yeah, I'll see you guys in my next video. Cheers.